Anticipation is a very simple setup. The whole idea behind anticipation setup is that when a stock with momentum is undergoing range contraction, a series of range contraction, not just one day range contraction, then in the next small time frame of 1 or 2 or 3 days, it is likely to break out in the direction of the momentum. That means if a stock is going up and it is forming series of low range days, and low range days as defined by this particular scan are stocks which are up or down less than 0.4%. So you're really looking for a stock which is basically uh, has a very narrow range consolidation for last couple of days, and then it breaks out. And the idea behind that is you want to get into a continuation trend with a very close stop and as far as possible with a predetermined entry point. This way what happens is you're instantly profitable if the trade works, and that's the key really to making this particular trade work for you. Now in this particular video we're looking at setups which have been posted by members as an anticipation setup. So please remember that there is an anticipation setup which I trade and which I said is how I trade, which is with the scans and everything, and there is an anticipation setup which members trade. Many of them trade something which is completely different from what I say as an anticipation setup, so keep that in mind when you look at these setups. I don't necessarily agree with some of these setups because they're not necessarily anticipation setup to me as defined by my anticipation setup, but I would go through all of them. Okay, so there are around 34 setups which were posted by members. Now see and I sorted by end daily. End daily is basically the absolute C minus C1. So as you can see that this particular setup is not an anticipation setup. The stock is already up 2.43%. I personally look for an anticipation setup where my stop can be less than 2% and ideally less than 1%. So anything which is like this is not an anticipation setup. Paycom, yes, this is an anticipation setup. High priced ones are very nice because something like this you can enter with a very close stop. If it takes off, say something like this, I would enter with around 135 or 136 as an entry point, and a stop which might be 135. So if it goes up, typically a stock like this, when it goes up $5 to $25. So that's the beauty of looking at high priced anticipation. This is a nice setup. It was on my list also yesterday. A little bit like a wider now, 0.73, because it tried to break out and then really didn't reverse. So PSX, another similar kind of a setup. This was actually a better setup here, and I actually entered this setup on this particular day, but and I see, if you see before that, it is like 0.32 and 39 cents, but didn't really work. Yes, I did get out with a little bit of profit, in the sense just to pay for soda, not the whiskey. MCY, again, this is not anticipation setup. This was an anticipation setup yesterday. Okay, 0.06. If you see, the stock was down only 6 cents and 0.11. So if you are I would have entered this yesterday itself. A whole point of doing anticipation is to find setups like this, but it's not an anticipation now. Okay, this is a nice anticipation. This is exactly what you look for. See, 0.09. This stock is up or down 0.09 and 0.39 cents. So if it gets going, you're looking at the stock making a move up around 10 to $15, and if you can get in with a stop up around $1 or even $2, you're looking at a very, very lopsided risk reward kind of setup. So these are the kind of high price setups is what I really focus on, because they can give you a very, very good high risk reward, and plus you can put a lot more capital in them. Again, I wouldn't say that this is a good setup, because this is already a breakout. The whole point of doing anticipation is to treat something like this as a breakout and enter just based on that. If you're waiting for confirmation, then why do the work of anticipation at all? That's the fine art. Trading anticipation is not a mechanical thing, it's a fine art, and the fine art is really about finding a setup where your stop is so close. IQV, yeah, it's like in a really looking like a reversal, but like it can work basically. I would like Tiffany again. Setup is going sideways here, like, and it was 0.35. See, the definition for me is 0.44 to minus zero point 0.4. So this was a good setup here, around $7-8. So this is a nice setup even today. GLW again, like a nice 0.60, 0.20. That's nice. KDP, I don't think this is a good anticipation setup. It just keeps going sideways. After a certain period, if it keeps going sideways more than 10 or 12 days, it's like a question mark, because it needs a breakout for it to confirm that it is breaking out. So try and avoid setups like this. Yes, and if it breaks out, I'll still buy it, but like I wouldn't buy it as an anticipation setup, because it just is going sideways now. Fleur, this is nice. Again, look at like, this is the kind of setups which you want like this. This is a very nice one. Like, this is, I also have this on my this thing watch list, because if it breaks out, you're looking at like getting in at around this point of around 51.25 or higher, a little bit higher than that probably. 51.30 or something, and then like, and if it takes off, you're looking at like a $4-5 move. And your risk will be very low. Ideally, like on these high priced also, I try and get into them with a dollar kind of a stop. Sometimes like you don't really get in early enough, and then you have to have a slightly larger stop. But like if you see yesterday also ISRG, I got in, but like if it didn't work, I just lost like less than $1.50 or something like that. So that's the point. Again, this is see, when you get like something like this, like, and I always look at it like, and I think this is a breakout itself here and didn't really do much. So this looks like, sometimes like, if you look at something like this, as it looks very compact, but like, when you blow it up, you will see that it's not as compact. This was a good setup here, but didn't really take off. So Clean Harbor, okay, nice. Berkshire Hathaway, again, good setup, high priced. GBX. See, sometimes like, I did look at this setup, like, and I have question mark on this kind of setups, because these are stair steps kind of. The past move has been stair steps, like, there was like in a 1 day only, and then nothing and nothing. So keep that in mind. Okay, as a trade, it can still work, because we are looking at really like 0.26%. So you might be getting in with like here at probably a price which might be, say, I don't know why it's got stuck there. But like you want like something which doesn't stair step like that, to just 1 day move and then stair steps. Okay, so keep that in mind. So if you look for this, like, you're looking at around entry around 59.30 or 59.40, and I would put a stop at around 59 if I get that entry. Okay, but I don't really like that setup, and the things which I may not like are the one which can sometime like just take off. PCRX, yeah, this is what you want to see, like a compactness here, like see 0.13, 0.029%, like that's the kind of setups which you want to see. Then this is a very nice setup, and in fact, this is one of the setups which I also have, and I also had like orders ready yesterday also on this particular thing. This is the kind of setup which, if it takes off, it can take off, and also the float is low, 16 million. Very nice setup. Then you have MIC, it's an extended trend, like gone up along, again going sideways, hasn't really like this breakout was just 1 day, so some question mark, but HI again, yeah, it's okay, but like I see the past move was so choppy, so maybe again, like when you have so many setups, you have to prioritize, and I always prioritize cardiovascular system. It's a good setup, 0.09. These are the the one which I like, and that's why I sorted by that end daily. Because if you see as we go down, you get really like the one which are very really compact ones, so sometimes like you can get in with this kind of setups with just 25-30 cents stop also, or you enter and before you can put a stop, the stock goes up, so you can just put it at a break even. This is okay setup, slightly extended. Um, and if you look at if you look at it like this, it looks like that, but it looks like just a little bit reversal on this one and just going sideways, choppy. Qualcomm, this is a nice setup, very nice setup. See, 0.08 cents. Okay, that's the kind of setups which I always like, because this is even if it just does $1 move, and if you can get in with a 25 cents, that's like 3-to-1 risk reward. So that's those are the kind which I really like, because 0.2%, and that's the whole art of finding setups like this, and that's a very nice setup. FCF, I think this looks like a reversal to me. I wouldn't take a setup like this, but in a lot of you member people, they are trading anticipation as more a pullback kind of setup. So if you are trading it as a pullback setup, maybe I don't really trade those kind of setups. Fixed, this is a nice setup again, like 0.05, 0.09%. Those are the one to look at, those are the one which can be very, very this is another one. So it's 0.03. This is what exactly you should be looking at. If it takes up, it's going to make 2, 3, 4. Even if it makes like 5% move, you're looking at around, this is a $38 stock, so you're looking at around $2 move for 5%. And if it makes 10%, and if you can get into this with 30, 40, or even 50 cents stop, you're looking at a winner which is 8, 9 R. So that's a nice setup. RPM, that's nice. Going sideways a little bit too much, but SRG, again, this is a rates tend to be slow mover, but this is a very nice setup, extremely nice. 0.02 cents, 0.04. What else do you want? Even if it goes to just because it's slow moving, if it goes to $1.55 or 5%, 4%, you're still what is going to be your entry? I would enter this with 48.75 as a order, and if it goes to 50, still you're your risk reward is going to be damn good. Okay, that's nice. All the one which are when you sort by end daily, you'll typically find the better ones are the one where it's very small moves. So this is again the only problem is it's gone sideways a lot, so I don't know, but not bad. This is again a good 1 cent, 0.03. These are the kind of setups which you want to see. Then LSCC, okay, this had a breakout and it failed, so you'll have to really wait for a breakout to happen. So there is no point in looking at setups like this. Sometimes HSI, yeah, okay, staffing, ATGE, that's nice, 0%. See, stock is up or down 0%, right? This, as I said, is not anticipation. So you have really nice setup in this list, and you just need to prioritize. Now, in order to prioritize, typically what I do is I look at the higher priced ones. For me personally, I look at higher priced ones as the first priority, because I can put in a lot more capital into higher priced shares like this. If I buy 1,000 shares, I will have 444,000 position. So that's my priorities are like that, but you don't have to go by my priorities. I trade a fairly large account, so I always look for the highest priced ones, but if you have a smaller account, you can look at a smaller thing. But I would say that for the best risk reward setups in anticipations are the higher priced, not the lower priced. And one of the reasons why I had the dollar breakouts doing very well, basically is because of trading a lot more anticipation setups on higher priced, where you can put in a lot more capital. So that's one way of doing this. The other way of doing it is by sorting by float. But the problem with float sort is then when you take the lower floats ones as the best one, typically you cannot get a very close stop, because when they break out, the Breda spread might be big. So that's the flip side to it. So your stop becomes much larger. See, try and understand, look at certain principles of this setup. One of the principles of this setup is like it's a continuation setup. So you're looking for an established trend and as a continuation. The other thing is that the more compact it is, the better it is, because if you can get in a very close stop, the whole idea of anticipation setup is to get a very close stop. If you buy a breakout, your average stop is going to be 5%, 6%. Because most breakouts by definition we are saying are 4%, and it's not exactly stock is going to be 4%. So if you put a stop at low of the day, you're looking at even 4% plus kind of a stop. While an anticipation setup, your objective is to get in lower than that stop, probably 2%, and ideally less than 1% if I can get in. Now, if that can happen, then what it does, see, you have to understand the maths of this thing. Like, if you can get in a closer stop, you can do more trade. If you can do more trades, then you make more money. It's as simple as that, because if you are not losing much money when the trade doesn't work out, and when the trade works out, you have a very high risk reward. And if your stops are very close, then you can make more trades. And if you can make more trades, the higher the turnover of your capital, the higher is the amount of returns which you can get, especially if you are an aggressive trader and looking for aggressive returns. So I would say that I would sort it by price, and I would look at the one which have the best in terms of most likelihood of breaking out, and that's how you can look at it. Avoid setups like this where the stock has already gone up. Like if a stock is up 2.43%, that's a breakout. And in fact, this was also not a very nice setup, because this was you want compactness happening in this direction, not expanding. Like here it was 0.79. So anyway, but that's the learning. So look for setups which are basically very, very compact, and the easiest way to do that is once you have a list sorted by end daily, and sorted by end daily with the lowest. I always sorted by the lowest value, so that the stock which is up or down 0% or 0 cents is the one which you first prioritize and look at. And if you can find good setups, then you can find it. And how to enter these is there is a video which I made on the site as to how to enter them with a predetermined order, or if the market is uncertain, say today the market is opening with a gap down, so I'm not going to be having orders, pre-placed orders on many of the setups. I might watch and enter manually. I do a combination based on my reading of the market and how the market is opening. But there are a lot of good setups. Something like this is a very, very nice setup. If it breaks out, it might become a swing trade basically, because this is earnings or some news and then it's going sideways. So and one of the reason why I conduct the boot camp and all is there is always this thing about how much you can do in a video, and how much you can, when you actually have a face-to-face conversation, the learning loop is completed. And many of the people who've been trading anticipation for a long period of time have been around for years on the site, and you'll see that most of them learn this technique in a boot camp, not necessarily from me but from other members also who do this very well. So this is a very nice setup to have in your toolbox, because you're not dependent on market or what is happening in the first half an hour or 15 minutes or 5 minutes to get into this setup. You have things in your pocket, and you have 5, 6 or 10 good ideas, and that's it, all that you need basically to make your day. If 2 or 3 of them trigger off, many times I've seen in the first half an hour, 15 minutes, 2 or 3 of my setups trigger off, and they just go up 80 cents, $1, $2, and you're up $3,000, $4,000, because I do $1,000 share size on these, and you're done for the day. So but the trick really is to develop this as an art, develop this skill as a skill and art, and spend some time thinking about studying past setups and looking at where you can put an order, where the order is not likely to be just get you chopped, and where you should be putting the order. So that's some sort of a learning curve, and the more you do it, the better you end up getting at doing this.